You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as the Options Insider Radio Network, and usually I'm coming to you from the icy and cold Options Insider Studios. This week, though, if I sound a little different, it's because I'm coming to you from a much warmer clime. We're in the southern studios of the Options Insider Radio Network, so if we sound a little different, it's because we're on the road. I also apologize for all of you who like to join us at noon Central, 1 p.m. Eastern every week via Mixlr, because we're on the mobile apparatus here. No live stream available this week, but we'll be coming back at you live next week. Stay tuned for that. In the meantime, of course, you can get the show, as always, wherever you find your favorite Options Insider programs. The easiest way, always, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, you can get more than just shows, of course. Breaking news from the options market, a lot of great unusual activity and analysis and articles and education that we put up on the site throughout the day. There's at least a dozen, if not 20 news stories a day. There's a dozen, if not 20 articles a day. Most actives, unusual activities. There's a lot of stuff going up there every day, listeners. So if you're not checking it out every day, at least once a day, you're really missing out. A lot of good stuff up there. Make our web team happy. Read what they put up there. And then, of course, when you want to mainline the audio, easiest place to get all that is our main network feed, available pretty much wherever you find your favorite podcast. So iTunes, TuneIn, Stitcher. It's available on Pocket Casts. We've actually put up some link up there as well. I like Pocket Casts, one of my favorite third-party podcatchers out there, and it works across devices, which is nice. So for us, we use it across Android and iOS and desktop, and it works on all of them. So it's a great one. We have links up there on the site if you want to add it to Pocket Cast, or just search for our shows in Pocket Cast. You'll be able to find it. They have, of course, that podcast directory as well. And however you listen to us, if it's after the fact, if it's live, if it's via the Rock Lobsters, Uncle's, Tin Can and String, however you like to do it, make sure you hit us up with your questions, your comments. We do love to hear from you guys, and really, you're the reason we do this show. So, let's keep that in mind as you hit us up with all those crazy, fun, and sometimes head-scratching questions. And joining me on the old program today, let's start off. I don't know who's really where. except that one of them's probably in the Duchy of Maine, so maybe we'll start there with our special guest co-host today. A last-minute switcheroo brings us the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. He's so dedicated to you guys and to the show listeners that he's taking a break from watering his ice rink, which I don't know if you know this, but it is indeed the national pastime in the Duchy of Maine. Mr. Rock Lobster, welcome back to the program, sir. Thank you for taking time out of your busy 1% schedule to join us on the program.
It's always a pleasure to be here, always. But I have to catch up. I've got to catch up because it's cold. It's cold, and I need to get some more water on there now that it's freezing. So that's my big thing because that's my job today, I guess. Option pit things are just quieting down for the week, so. But that's what we got. But I get to come here and I get to listen to Russell, which is always insightful. Always insightful.
And I won't take that as a slight at all, sir, as I move on to the other person you're talking
about. Sorry, I forgot about you.
I'm that guy who just runs the show and whose show it is. He's meaningless in my equation. Let's turn on to the one who Mr. Rock Lobster finds so deeply insightful. Mr. Russell Rhodes, the head of education over there at the CBOE. And as he informed me prior to the show, I've often jokingly referred to him as Dr. VIX, or at least someday Dr. VIX, once he gets his doctoral papers. Well, he stepped an inch closer to that. I believe you're pretty close, Mr. Dr. VIX, right? All you're missing is aforementioned paper, the thesis, and then you shall be the critically acclaimed Dr. VIX. Is that correct?
That's right. I'm what they refer to as all but dissertation as of this morning. There have been happy dances posted on Instagram and Twitter to such effect, which also made me realize that I've put on about 30 pounds while I've been doing this program.
I haven't seen a good dissertation yet on the origins of the Options Insider Radio Network and like a deep dive into my bio. So if you wanted some help with that dissertation and that excellent, compelling subject matter, I would be happy to assist you, sir.
Okay, I'm going to come down there and interview you instantly.
There you go.
Since it's 80 degrees warmer where you are than where I am right now.
Yeah, it was literally 1 when we left, and it was about 65, not degrees. 65 times warmer when we landed.
I love it.
When it's 65x increase in temperature, you're probably doing something right, particularly this time of year. All right, with the weathercast out of the way and the team assembled, we're going to dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, a portion of the program where we break down the week that was and indeed still is. From a volatility trading and analysis and research and trending and development perspective, an interesting week. It had a few interesting moments. You could probably guess when they were, looking back at what was on the docket for this week. As we're wrapping up the week here, as we're doing this show, we're recording it, unfortunately not streaming it live, right in the middle of the session here on Friday, December 16th. And most of the vol and the other interesting developments we saw coming off earlier in the week have kind of tapered off now. We're seeing VIX Cash hovering in that 12.5 or so range, back above that mythical 12 handle, but nowhere near the mid-teens or above, where perhaps some people were threatening it and thinking it was going to head with all the Fed crew on the docket this week. And today, of course, most of the major indices unched or slightly off on the day, but not a big trending day in the underlying either. But still an interesting week. We, of course, had Miss Yellen and crew on the docket this week, and it's been a much anticipated meeting for some time. They, of course, started this whole song and dance about a year and 3 months ago. I think it was about getting into Q3 of last year, where they kind of first popped up on the radar again and said, hey, wait a minute, we're going to start raising some rates. And then, of course, they really didn't do much until the end of the year when they threw a little anemic 25 basis point raise in just to say they did something. And then the better part of this year, of course, we all know the story. The year started off with just roaring out of the gate with China and the Fed and everything else kind of conspiring to give just multiple progressive sucker punches to the market on an almost daily basis going forward. We saw a lot of turbulence, a lot of volatility in the early parts of the year, but surprise, surprise, no rate increases. We saw a lot of macro rate developments, which were kind of interesting, including effectively negative rates in many places around the globe, and yet still threatening throughout most of the year to finally raise rates. And lo and behold, and then, of course, they sit on their hands going into the election. Surprise, surprise. The independent Fed deciding not to act during the time when they get a new boss. And then, of course, coming into the end of the year when they once again decide to raise their finger and say, hey, pay attention to us, and do their relatively paltry raise, all things considered. But still an interesting week to watch. Mr. Rock Lobster, since you're our special guest today, I'll give you pride of place. What was catching your eye in this week of volatility? Kind of an interesting one, a lot of it driven by Miss Yellen and company. And if you have any thoughts on the Fed, I know you're not really one to pontificate on such things, but if you have any thought on that, sir, feel free to have at it.
The funniest thing about this week is most of the jumps in volatility were when the market rallied. Because we had looked at implied volatility even last week into this week, where some of the weekly volatility got to the 6 handle, which is pretty low. The market just has to go poof, and the options expand. So
in Don Schlesinger terms, that would be a not sell.
And that would be Don would definitely say you don't sell those, because you leave the room and they've expanded, so you can't really sell those options. But what happened is you get sometimes when the bullish sentiment becomes so overwhelming, people just forget that options can, when they move on the upside, there's volatility there too. So I mean, if you're looking at VIX today, the market's down a little bit. The Qs are down almost 0.75%, and VIX is down 21 cents. Now there's some weekend there, but also I think VIX monthly, the old VIX calculation is in the. I was for a while this morning. It was in the 11 handle. So there's just not. It feels like it's 11.92 right now, and that's for a Wednesday settle. So. The market for volatility is not looking big and robust. That doesn't mean it can't change, but mostly, almost all the trades we looked at are more of kind of selling the vol product type trades and then buying gamma and the various indexes and stuff. And it's been a good couple of weeks for us like that, and that's doesn't look like it's going to change too much. We've got the rally. The banks seem to have flattened out, at least today. Tomorrow could be another day because they were up large yesterday. They always seem to find a way to, come back to unchanged by the end of the day. But that I guess has been the story. There's been the Qs caught up a little bit to get to year highs. Obviously, the S&P 500 is right at year highs. So. You're up here, the vol's low, and nobody's really panicking very much. So there was a little bit of a bump in the curve for some downside puts. So from a volatility perspective, it's kept VIX from really going lower. But at this point, it's 1261, and if it'll drop a little bit as we go into next week if the current trends persist, but it doesn't have a lot of fall off the face of the earth quite yet into the low 11s or high 10s or something like that. At least not yet.
Yeah, it has been an interesting week to watch. You're right, and this was Miss Yellen and crew was kind of the last big event on the calendar in terms of anything that could potentially inject some vol. That said, I'm hesitant to go too far down that rabbit hole because we made very similar comments this time last year, if you recall, once Yellen and crew came out and raised their hand in the air, said, okay, a quarter point. We were all kind of pontificating that maybe things would be kind of quiet to start the year because there wasn't much on the radar, and certainly earnings hadn't done a lot. And then the year literally roared out of the gate on the first trading session and never looked back for the first few months. So I'm hesitant in that light to look forward and say, oh, no vol on the radar, because you never know what Putin and company or the Middle East or who knows what other shoe could drop. China lurking out there in the hinterlands, maybe up to. I saw they captured a drone this morning. If you can actually capture an unmanned thing, if that's the right word, I don't know. But there are all sorts of potential injectors of vol. Not to mention Mr. Trump swearing in on the 20th. So it's a lot. Maybe that's a potential driver going forward as well. And you also have the electors coming up. Maybe there will be some dissenting in the Electoral College. That very, very antiquated little mechanism we have here in the States. All that to say, maybe there is something on the radar we can look forward to. But before we get to that, Mr. soon-to-be Dr. VIX, unofficial paper Dr. VIX, let's say. What caught your eye in this week's activity, sir?
Well, I was just going to circle back to something Andrew pointed out, that the VIXMO, which uses the previous VIX calculation, it's very heavily weighted in the January 20th options right now, versus the I don't know what the third Friday in February is off the top of my head, but those options expire the morning before we get a new president. If you take a look at the enhanced VIX calculation, the one we use now, it is combining the options that expire on the 20th and the options that expire on the 27th. And you do see a bump in implied volatility when you go from the 20th to the 27th. And the ones that expire on the 27th are getting more weighting than the third Friday in February option contract. So that difference might actually have to do with the election and just how the calculation is a little bit different. So, and then, otherwise, it is interesting to watch what VIX is doing, going up regardless of what seems to be going on in the world or with the S&P 500. And I do think that now that the election or the inauguration is, starting to creep up on us, and the known unknown of what's Donald going to do is probably going to provide a little bit of a floor, a rising floor for VIX as we go through the next few weeks.
Yeah, you're right. That will be an interesting driver going forward, as we do have Mr. Trump in not the rear view mirror, but right in front of us. So interesting to see. Of course, they're choosing the cabinet and everything else now, and it's all that fun time when we have the big handoff of power between the current administration and the former. So unlike a typical year where maybe January wouldn't be such a tumultuous period, maybe this coming season we'll see a little bit of a change. The futures are still pricing in a little bit of uncertainty going forward. We said the cash is right around the 12.5 level. That front month future, the DEES is certainly coming closer. So we'll look a little bit farther out to Jan. In which case you got about a 2.5 point premium. That's about where it has been for the last few weeks here. So you're pricing in about a 15 level going out to Jan. So that, of course, gives us some indication of what the market is looking at, going out a little bit beyond just what we typically I should say a lot of people really look at, which is just the old VIX Cash. And our old friend VVIX, the volatility of VIX, has been kind of floating around this low 90s level, and it remains there this week as well, about a 94 or so. So coming off its recent highs around the election, where it hit about a 115, actually about 120, almost 121 going through the electoral cycle. Then since then has kind of been was on a bit of a downward streak. Then Miss Yellen and company managing to give a little bit of life to it over the last week or so, but hovering right around that 94 level. So certainly not at the lowest it's been. We've seen it a bit lower since then, but certainly not in the high part anyway. Also, it's kind of you could say in the middle to low end of its recent range, but could be poised. We have a few new shoes dropping, perhaps in the new year. We might see VVIX roaring back to life, as it is wont to do. And Mr. soon-to-be Dr. VIX, I know you love to pontificate on all things weeklies. Maybe weekly VIX options could be your dissertation. There we go. We're doing all your research work for you here on the show. But that said, Mr. VIX, or I should say Mr. Dr. VIX, soon-to-be, what is up for Russell's Weekly Rundown?
Now, Russell's Weekly Rundown.
All right, everybody, welcome to Russell's Weekly Rundown. We all know what the show what this part is, so let's just get into it. Mr. Russell, the floor is yours, sir. What's up in all things weekly VIX?
Do I get new music for 2017?
Do you not like the old music?
I don't know.
I thought you were playing it for all and sundry whenever they came into your office.
All I know is the 3 women that I live with say that they do not want to be associated with that music.
That means it's a reason. That means it's a keeper. That's a reason to keep it.
It is a keeper. It's a keeper. Well, so next week is the 21st is the standard expiration, but looking out to the 28th, somebody's actually doing something out there, and then things really kind of die on the vine. But over the past few days, and one of these trades goes back to last week, I've seen probably the biggest activity has been sellers of call options and naked sellers of call options. Somebody sold the 14th is Wednesday. On Wednesday, just as we got the Fed announcement, somebody sold about 6,000 of the December 28th 14 calls. They sold them for between $1 and $1.05, which means VIX settlement right there in the week between Christmas and New Year's, while we're all taking long winter naps or trudging through the snow with buckets of water to increase the thickness of our ice rink. Because I assume in Dutchy country, you're not allowed to use hoses, or sunning ourselves on the beach right there in the middle of that holiday. As long as we get a VIX settlement of 15 or lower, they're in pretty good shape for this trade. And then somebody else last week on the 9th sold a couple of thousand of the December 28th 19 calls and took in 35 cents on those. We've gotten past the last known unknown for this year, which was the FOMC from earlier this week, and now we both of them look like kind of smart trades, because it's very difficult to see what might come along and boost volatility. But then again, the types of things that really cause volatility to bump up usually are the big surprises. So that's the only danger is the unknown unknowns. I'm absolutely shocked that a tugboat, a little rowboat, can pull up next to a U.S. Research vessel and grab one of our drones and paddle away, and the market doesn't seem to care.
I think the key part being, of course, it was unmanned essentially, right? So it's a drone.
Right.
So that's kind of what drones are for, right? The drones are there to be captured and shot at.
Yeah. I want my drone back.
I want my drone. So. There you go. That's what the big driver is. If all this conflagration happens over an unmanned vehicle, then I think we're viewing the unmanned vehicles incorrectly. That's what they're for, to be sent into harm's way. And then we don't have to worry as much. We don't have to have a massive conflagration to get our drone back.
It's not even a military drone; it's a research drone.
Exactly. It's we have those in storage everywhere. We can go get those. No big deal. But that said, it was an interesting week. You mentioned kind of the puts, and I know puts have kind of been one of the interesting narratives for the past few weeks in VIX options. We've been saying that lately on the show, which is interesting because normally we don't talk about puts a lot on Vol Views because VIX, as we all know, very call-heavy instrument, anywhere from about 2.5 to 1 to 4, maybe even 6 to 1, depending on the time frame you're looking at. Calls over puts, lighting it up out there. But these days, puts have been very much on the radar. In terms of the week first, looking back at the mothership VIX options, it was a fairly light week. Not as anemic as some recent weeks, but most days light, with the exception, you can probably guess which day was the exception to that this week, and it was Tuesday with about 850,000 contracts. So seeing some sparks of the old near or close to 1 million contract VIX there on Tuesday, thanks no doubt to Miss Yellen and company driving a lot of action. The rest of the week substantially lighter than that. The ADV still hovering a little bit shy of that 600,000 level, probably I think in the 550 range or somewhere along that level. And of course, we talked a lot on the show about 1x2 call spreads, and that indeed has been, if there's one trade of the year, I guess you could say, in terms of just how many times it's gone up, say nothing of the efficacy. It's definitely got to be that upside 1/2 ratio vertical in VIX, but we're seeing a lot more interest. Like we said, puts are becoming more of the narrative, and 1/2 put spreads also becoming more of the narrative, and we've talked about them on the show before. And today, of course, this week, we saw people putting those up as well, or perhaps taking them off. In particular, on that Tuesday day with about 850,000 contracts, about 72,000 of them or so coming in a massive DEIS 1/2 put spread. The DEIS 13-12 put spread going up. Paper selling the 12s, buying the 13s, doing it 21,500 by 51,200 times. So actually more than 2 to 1 and a little bit higher on the ratio there. So interesting stuff. It's ratios seem to be the order of the day, no matter where you're looking out there in VIX options. And this week, no exception with the DEIS 1/2. I think we have a listener question about ratio put spreads a little bit later, so I'm sure we'll be talking ratio put spreads again. We also saw what looked like on Tuesday. Again, Tuesday was the lion's share of the activity this week. We also saw what looked like a interesting, I think you can call it perhaps, it's not quite, it's a ratio, but not quite a 1/2. DEIS 1622 versus the Jan 1723 roll. We saw paper coming in buying the 22s and DEIS, selling out the 16s, doing that about nearly 40,000 by 28,600 times. So kind of more, I guess you can call it really a 2x1, 2 of the 16s versus not quite 1, but not quite 1 to 2, but a ratio there on the 22s, then turning around and buying about 28,600, so a similar amount there, of the 17s, and then selling the old more standard, close to 1/2, if not quite 1/2, 39,000 of the Jan 23. So a bit of a funky one there as well. I should also point out in that 1/2 put spread from Tuesday that there is size open interest on those D strikes, as you expect in most relevant D strikes these days. VIX is, even on light weeks, still does more paper than most other products out there. And there is size open interest on both of those strikes, so it could have been someone coming in and perhaps closing out that DEIS 1/2 in light of Miss Yellen and company raising their heads this week. So interesting stuff. I don't know, Mr. Rock Lobster, any particular, I know a lot of DEIS put trades have been catching your eye out there, in particular DEIS 12 puts. Did you notice this 1/2, and what are your thoughts on the efficacy of the 1/2 put spread? We're always talking 1/2 call spreads. Are you a fan? I know your counterpart there, the Greasy Meatball, has extolled their virtues on this show in the past. Are you a fan as well of the old 1/2 buying 1, selling 2 usually put spread in VIX?
I like it for VIX. One is because every once in a while you do catch a bid for those downside puts. Well, relative for VIX, because the skew always compresses that stuff. But it's a nice way to be long VIX without actually spending money on anything. Another nice thing is, VIX is so bouncy around the 12 handle. 1/2 put spreads can work pretty darn well. You also have that little future thingy that happens where, the contango value kind of sits up there, and there's kind of you have to be patient with them. It's not an overnight trade, but it is a way to trade VIX from the long side without having to put out a debit per se, which I find very appealing. So I guess in the short thing, yes, and we have found like the 12 puts were quite bid. This week we did look at some 12.5, 12 put spreads, 1/2, just as we speak. Not quite the 50 by 100,000 or the massive size that was going up. But what was funny is how bid that 12 handle got for December expiration. So it looked like a trade that has a good shot. And again, like Russell was just saying, with VIX Mo, you're moving into the DEIS expiration. We'll see how low really VIX can get. It has been, we've seen the 11 handle. It has been very stubborn though. It's been very bouncy off of 12. So I don't think that's going to change, just because you're getting a little skew. All that little stuff that creeps in to keep the vol from really going to the bottom of what I call zone 1. It's it's very hard to maintain 11, the 11 handle in VIX, even harder for 10. So, but we're there. So that's why 1x2s look good. There's not a lot of real downside, and they do make a nice little trading vehicle when VIX bounces up. You can buy in some of the short puts for little tiny prices. And you can play the ride the VIX game. So it's similar to the wheel trade, but sometimes it can be more exciting than the wheel trade.
We know when Andrew is getting into the zones of volatility that it's time to jump on over to some other stuff. Before we do that, though, I do want to point out the hot VIX strikes, the top 10 for this week, because it's kind of interesting. We got a little bit of might be the first time. I'll have to go back and check in the history of this program. It might be the first time that we've seen puts topping the top 10 list, the hot strikes for this week, which is kind of interesting. Again, that goes back to what Andrew was just saying about the 12 puts in particular being the strike du jour and the option du jour this week, because it was number one with a bullet on our top 10 list with 314,000 of the D's 12 puts lighting it up, taking the number one spot. You know, if you listen to this show for any length of time, listeners, that puts are typically hard to find on the top 10 list, shall we say. But this week, we have three of them, and including the number one spot, which I'll have to check, but I do believe that may be the first time in the history of us doing the show that we've started off with puts. If it isn't the first time, it's happened maybe once before, but it's certainly not a frequent occurrence by any means. Number two, dropping off a bit to about 270,000 of the D's 21s. Number three, 251,000 of the D's 20s. Number four, about a similar amount, 250,000 and change of the D's 25s, the Christmas D's 25s, if you will. Number five, another put, second put on the list, the D's 13 puts. So the 12 13s, not surprising, lighting it up this week and getting on the list again this week with about 243, nearly 244,000 of those bad boys open. Number six, I should say, the D's 22s, 238,000. Then our last put on the list, number seven, the D's 14 put with 194,000 contracts. Number eight, the D's 16s, 194. Number nine, the D's 27s. So no D's 30s this week. Our most optimistic strike being the D's 27. Still fairly optimistic in their own right, 186,000 of those bad boys open. And number 10, the D's 17s, a far more realistic strike with 162,000. Total of about 7.8 million contracts outstanding, about 5.5 on the calls, and about 2.3 on the puts. So an interesting week in all things VIX options, but let's keep moving because there were other areas exhibiting vol or perhaps a lack thereof. We would be remiss if we didn't at least touch on crude volatility. Again, if you want the full deep dive into all things crude, including crude skew, crude volatility, and a bunch of other commodities, check out our TWIFO This Week in Futures Options program. Normally coming up live right after this program. We'll be doing it live to tape again this week because we are in the mobile studio, but look for it on the network feed, or you can subscribe to it directly, This Week in Futures Options, wherever you find our favorite podcast programs. But we do have to talk about it on this show, too, because it is such an interesting volatility story. I think it was the Greasy Meatball and I a couple of weeks ago on this show who were starting to look at some of our favorite indicators like OIV and OEVX, and they've historically, at least for this past year, have shown a remarkable floor, a nice resilience around that, shall we say, that 35 to 37 level, where once they hit that, they tended to bounce back north, and they would see a little bit more volatility in the commodity space. A lot of that, of course, was due to sell-offs in big crude like WTI and others, because the volatility premium to those products still pretty much markedly is in the puts versus the calls. And so we saw that even recently with the OPEC meeting with OIV and OVX spiking to the mid-50 range, I believe. Then, of course, when they started trailing back off into the high 30s, a lot of people, myself and Mark included, thought maybe this was a sign that we were going to see a little bit of that mean reversion coming back in crude. And instead, we've seen exactly the opposite. We've seen it explode through the recent floors, explode through the 35 handle last week. And as we are recording this right now, OIV and OVX hovering right around the 30 handle, which is just an impressive level out here in this product. And perhaps, again, showing that what were some recent floors and a lot of supports that a lot of people thought were in place out here in these products, particularly from a volatility perspective. Maybe there's a new vol regime coming, particularly now that we're north of the 50 handle in products like WTI. Maybe we are headed for a new regime Mr. Rhodes or Mr. Non-Greasy Meatball, Mr. Rock Lobster, what are your thoughts on the ever-evolving and ever-diminishing realm of crude oil volatility? Whoever wants to hop in first can have it.
I'm hopping in. How about that? Yeah, I'm closer.
Whoa, look at that. Cutting you right off. Cutting you off at the legs, sir.
Damn, he's fast.
I know, but I'm prepared. So oil volatility, hovering around 30. It's actually, the long-term average for oil vol is around 37. A lot of people don't realize that. And the average this year has been 45. So 30 is actually pretty significant on the downside. We've gotten to the teens in the past. I just can't see that happening for a lot of reasons. For just new regime, new. I don't really think you're supposed to call the new president the new regime. That just puts a bad tone on it all around off the bat.
I hadn't thought of it in that light.
The new administration in if we ever get a regime in Washington D.C., that might be kind of frightening. But the new he's going to mix things up for a while. And by mixing things, everybody thinks, I think the common belief might be, well, he's going to show up and he's going to be like, all right, everybody just drill and make oil as cheap as possible. And let's mess with our enemies that way. The thing is, I think if we start to mess with our enemies a bit, one of the reasons that we decided to start exporting oil was demand in China. Well, what if we decide not to give them oil until they give us our drone back? So there could, and what I mean by that is there could be some geopolitical stuff that does pop up that comes into play with respect to the oil market. I can remember back in the day, every time there would be any sort of resurgence of fighting in the Middle East, one group's not getting along with another, it seemed to spike the price of oil, and we seemed to have this geopolitical risk premium that showed up in the price of oil, and nobody talks about it anymore. And I think it's because it's not there. Maybe in addition to bringing back, making America great again, he's going to make oil volatility high again, or at least bring back a new risk premium that we haven't had in that market for some time.
Yeah, it is interesting to see all the different nuances. I like that. I mean, of course, we were talking volatility regimes, but it could be applied to Washington and perhaps elsewhere as well. Lest we get too political, let's go to the haven of all things apolitical, a.k.a. Maine, that bastion of libertarianism. Mr. Rock Lobster, what are your thoughts on the ever vanishing oil volatility?
Well, you think of Maine as a third world country with really nice roads.
And nice ice rinks.
Think of it like that, it's a lot easier.
Nice ice rinks, a big LL Bean store somewhere, a nice Starbucks in Kennebunkport. That's kind of about it, right?
Kind of, actually. Although there is Portland, which is quite a hip little town, actually.
Because I think
all the hipsters are there.
I think the other Portland has maybe stolen some of its thunder. There's no TV show about Maine's Portland.
Yeah, that's true. Well, that's because it's the town does not take very long. It's a fine walking town. Anyway, what I'm looking at with oil, and it's a option pit subject. I'm starting to look at longer term vol. I would say I'm going to agree with Russ. I just don't see the whole vol thing being over. I do find that some of the longer term volatility is, well, I look at vol sometimes like this, where if you have the underlying price is half of what it used to be and you're seeing the vol at the same level, I view that as really low volatility, right? If it's one thing buying 10 volatility on a $100 stock, but if you can buy 10 volatility on a $10 stock, you're like, ooh, that looks really exciting, right? Because I can get some gamma. So that, again, another subject of mine, get your gamma, get your options for free. But we'll get your juice for free. I got to get my title straight. I want to put you in the credits, by the way, for that long ago. But anyway, you are seeing very, I think, gamma-rich long-term vol, which is kind of Schlesinger is going to write and say, Andrew, you can't talk about it like that. But when the vol gets so low, in a low dollar product, you have real explosion potential. Don't know what's going to explode. Don't know what's going to happen. All I know is to own it is really cheap, and it's easy to finance. You can finance it with a variety of mechanisms, but we won't go totally into that on this show. But it's it's like anything. It's like an opportunity. I'm in the buy low, sell high camp when it comes to that kind of stuff. So it's about as cheap on a 180-day basis as it's been in like forever. So I just see that kind of cheapness and it gets me excited, in a not tawdry sort of way.
Yes, that's yes. Nothing tawdry about loving some cheap gamma, some cheap vol in crude. And you're right. It is if you are leaning any sort of long premium type strategy, these are indeed enticing times. Of course, we have to bear in mind the skew out there, and the puts have always been richer than the calls. Of course, that is starting to mitigate somewhat in the near term, as we saw, crude spike a bit to the north. The nearer term calls getting richer. Longer term, there's still a discount out there. But if you factor in the skew, it is an interesting time to be playing in all things crude. It's also an interesting time to let you guys weigh in on what's on your mind. So without further ado, let's dive right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Volatility Voicemail. This is indeed the portion of the program where you guys take the reins with your questions, your comments, your insights, not just for us, but for your fellow Options Insider and indeed Volatility Views listeners. Before we get to it, I know you guys probably chatted about this on the show yesterday. Well, by the way, I haven't had a chance to listen to it, but thank you for stepping into the void as I was escaping the realm of 1 degree for 65x increase in temperature, if not more, if not an 80 to 85x increase. I'll have to check the latest numbers. But that said, you guys did an able job. I'll have to listen to it after this show. You and Uncle Mike Tusaw stepping into the breach. I know one of the things Uncle Mike wanted to discuss, something we discussed on Monday's option block, and indeed, I think, Russell, even you had a chance to even weigh in on the advisor's option on Monday, is the are the surprising results of our options question of the week poll. We thought this would be a sleepy one for a sleepy week, and it turned out to be anything but. You guys are voting and commenting and asking us questions en masse about this, so I thought it was worth mentioning on this program as well. We asked you guys this week, hey, what do you got? Financial advisors represent the last options frontier. What level of options knowledge do you expect from your advisor? We gave you 4 choices, as we are wont to do in all of our Twitter polls. None. I'll do it myself. Level 1, buy puts and calls. We kind of termed them like an options broker gives you approval levels for options trading. Level 2, so your basic income, writing covered calls, writing puts, as well as having some knowledge and wherewithal with volatility. And then level 3, you wanted an options specialist. That means you're going to this guy specifically because you want him to trade options with you or for you, and making that an interesting way to go as well. So interesting stuff all around here. And the numbers were surprising at the beginning of the week, about 1 hour in, and they're still surprising here towards the end of the week. Do you guys want to take one last guess, each of you, at what is winning the poll before I give you an update on the numbers? Maybe Mr. Rhodes, we'll start with you.
The mute button. Where's the mute button? Oh gosh, has it changed at all? See, this is unfair because I was on earlier and I already knew the answer. It's not fair for me because I know the answer.
Well, so does Russell. So does Andrew. I'm just asking if you think it's evolved since we last talked about it on Monday.
No, everybody wants to do it. The people who listen to us, the people who listen to us want to do it themselves. And do you know how I know this?
How do you know?
I've asked. I did a Traders Expo or something like that years ago, and I said, how many of you would be willing to give up what you're doing option trading wise, give it to somebody else if you knew they were going to do a couple of percent better than you? And nobody was willing to give it up because they enjoyed the process. And I think that's why none I'll do it myself is probably still winning.
Yeah, we certainly do speak to the choir very much when it comes to the options audience. Mr. Rock Lobster, same thoughts for you, or do you think that maybe the answer has changed somewhat?
Nope, I think similar thoughts. I mean, at least because we talked to kind of a group of people that like to trade options. They come to our chat room and our buyer education stuff so they can figure out how it all works, which is kind of what we specialize in doing. We do the splaining and trade derivation. So, they want to put their fingers on it, and maybe they don't quite trust somebody else to do that for them.
Yeah, that seems to be the way they're leaning with about none. I'll do it myself. Still holding a commanding lead, 43% here, and as the poll. Well, it's not done yet, listeners. You still got another couple of days, I think, for this guy to vote. So if you haven't done so yet, but 43% taking it right now with none. I'll do it myself. All of the hardcores out there in our audience saying, pshaw. I don't need no stinking help. I want to do it myself. Level 3, people who want an option specialist coming in at a tight number 2 with 26% of our listeners wanting that, and then pretty much a tie between level 1 and level 2. 16% saying level 1 and 15% saying level 2. Income and vol. So I thought that was kind of interesting, and these numbers have surprised me all week, and they remain surprising as we round out the week here. Let's get some other your questions here. Quickly on the panel, got one here from Hitman. He says, "Is the crash priced in yet? What about black swan events? Are there any options indicators showing one of those may be on the horizon?" Well, there's a lot of places you might want to look for those types of indicators. What you're terming tail risk. We've talked here on the show already. We talk most of the time about at the money vol, which is measured by the VIX Futures or the VIX Cash or a bunch of other things. VIX Cash obviously having a few other mechanisms involved there, but primarily being a measure of at the money volatility. The futures being the at the money volatility going off. What you're really looking at there, when you're looking at crash indicators, is Skew. And there's a couple of different places. Well, there's a number of different places you can look and find that. You can price it up yourself. Look at the typical way to do it is a 25 delta put, 25 delta call. So your net 50 delta risk reversal is the way people usually price it up. I've seen people do 10. I've seen people do other levels depending on what your preference is, if you want it a little bit tighter or a little bit wider. But a 50 delta risk reversal is usually a good way to do that. And you could measure that yourself in any product. I'm assuming you're looking at Black Swan, so you're looking at S&P, but you can do it in your product of choice if you are indeed so inclined to do so. And then, of course, there's products out there already doing it for you, like the CBOE Skew Index. That one, it could take a little bit of learning to understand the methodology. They quoted, I believe, 125, 120 or so, somewhere around a baseline, and then above that is typically a little bit more elevated. Below that is going to be cheaper, and it's right around a 130 right now as we're talking. Of course, when you're talking Skew, there's a lot of moving parts involved. There's what's going on with the put wing and the call wing, so they kind of move independently. Sometimes I think it's better to do that measurement yourself. That said, Mr. Rose, Mr. Corner Office, you guys are putting out a lot more in the Skew zone going forward. Including one that I believe is going to switch between a risk reversal and a strangle, depending on what the Skew is doing. So what do you have to say to our friend here, Hitman, who's looking for ways to measure that stuff? And then B, are you looking in any of your myriad CBOE indices, anything pointing toward a Black Swan event in the imminent future?
There's nothing pointing toward a Black Swan event in the near future. Even when you start to look at the implied volatility going out just beyond the election, there's heightened risk, but it's not it's not total cray-cray risk. I think ever since Trump made his speech, the I won speech, it really wasn't accepting a concession or whatever. People believe that he's not going to go completely over the edge, and I think that's the black swan that everybody's looking for. Although we know by definition, if we anticipate something, it's not a black swan. I think rowing up in a rowboat and stealing our drone is a black swan, but nobody's paying attention to it right now. So I do think that the Skew index does a pretty good job of giving you an idea of how much risk is being priced in by out of the money SPX options. And I think a lot of professionals like to take a look at 95% strike puts versus 105% strike calls. Thing is, the call crush can probably come in there as well. There are lots of different ways to go about measuring it. We've got ours. Other people have their own ways of looking at it. I think in the end, they all basically tell you just about the same thing.
Yep, a lot of different flavors of Skew. What is your particular flavor? When you walk into the Baskin Robbins 57 flavors of Skew for your choice, Mr. Rock Lobster, what's your choice? What is your, say, Rocky Road or mint chocolate chip of Skew flavor?
I look at Skew like, because as SPX trader, kind of the old inflection around the at the money. So we actually, with some clients, developed just our own way to look at it. So I don't use any of the off-the-shelf Skew thingies because they all of them have a little bias. So as long as they're helpful, but you have to know what that Skew bias is. Is it called at the money, or is it is it call to put? What Skew are they measuring? So you got to make sure that when you pick your Skew flavor, what the heck is in the ice cream. I think wasn't there one like from Credit Suisse? There was that crazy. It was the out of the money call. It's the out of the money calls were so cheap that you could go.
Yeah, they measure like how far out you have to go to offset the cost of a call, or vice versa, something along those lines. Just because they had to make it a little bit more obtuse in order to justify their fee.
And it was all time, that all time. Only a couple times it's ever gotten that all time, and the market was supposed to crash, and then we didn't. So I look at that, and usually you do get the surprises. Like last August, that was a surprise. I think that was kind of a many factor thing, but even the surprise had a little bit of a run up in Vol 2 that day, although that was a huge dump in August last year. Vol did actually run up considerably a day or two before, so there was a little bit of like kind of bad blood in the air. Usually, even during the financial crisis year, the vol started to pick up. It generally, even with a black swan thing, is there, to me, there usually has to be a little vol. You start to see it. It does start to percolate early, meaning you're gonna see some of that appear. VIX gets higher, stocks all of a sudden start showing a little bit. The liquidity starts to get a little thinner. You start to see a little more movement. We're not right now. It's kind of the opposite. You're sort of seeing that vol crushing movement, and the only thing that's making vol go up is the fact that we might rally too much. So I don't know how long that goes on, but it's. Like Russell says, I'm not seeing that Skew-wise for us, even on the short-term stuff. Nothing's looking, ultra interesting to trade. There isn't a huge bid for that stuff, and vol's really low. So normally I prefer to sell that when it gets bid. It just is not. It's not around. It's not around right now. So I'll go with Russell. It's just not a. If it's in there, it's hiding deep in the bowels somewhere of some bizarre indicator that we do not know about.
If you're paying attention, playing the home game there, Mr. Hitman, all the cool kids, they don't do these easily packaged Skews. They have to have their own flavor, and Mr. Rock Lobster is not an exception. He has to have his custom Skew indicator lest he go off the shelf, and he would never.
I call it the skewulator.
He would never go to the men's warehouse of Skew. He's going to the tailor to make his own Skew. And that's how he rolls. And you're right, Russell, of course, asking about something that kind of pricing in a black swan does kind of somewhat, the definition of the black swan. There are many different definitions of it out there. It's kind of taken on a life of its own. But one of the definitions out there is that you don't really see it come until it comes. So saying something is pricing it in does kind of miss the point a little bit. But I see what he's coming from and where he's coming from. So good question, Mr. Hitman. We'll have to keep on rolling now into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the program where we attempt to guess what the VIX Cash has in store for us for the coming week. And it looks like this week, yet another in my, shall I say, if I do say so myself, somewhat impressive string of victories, as I put in about a 12 and a quarter last week, and we're coming in right now towards the tail end of the show, right around a 12.60. So about a 0.35 away or so, but much closer than the next closest, which would be Mr. Russell, actually, coming in close for a change with his ever-present buying of volatility. He was at a 13.5, so he was about a 0.9, 0.85 or so away, and the Greasy Meatball taking the downside and missing it by over a point by about 1.1 handles out there. So yet again, I shall claim victory, and the Rock Lobster shall claim umbrage. As we move on to this week's, let's see, what am I feeling here? Someone should be keeping track of these victories. I think Mr. Rhodes was going to, and then his relatively impressive string of misses has caused him to not be inclined to do so. So maybe we'll have to go back and scour the records. But I do believe I am in the catbird seat coming into the end of the year. So that means I get the choice of going first or choosing someone else to go first. I hate going last because then someone always tries to, if someone picks right around where I want to be, then I have to adjust mine. So I'm going to go first instead. And I picked about 12 and a quarter last week. We're at about 12.6 right now. We kind of just talked about on the show how we don't feel a lot of vol in the near future. But that said, people are grabbing our drones. And last year we did see some surprises coming out, again, a little bit later in January as opposed to right now. But still, it's an interesting time. So I'm not going to discount it too far below, I think, where we are right now. I'm going to say a wee bit shy of where we are right now, but nothing crazy. I'm going to say about 11.75 to come into next week. All right, and the next closest was Mr. Rhodes, so I shall give you the pride of place, or perhaps the dubious honor of going second, sir.
I'm going 13. And the reason I'm going 13, there's actually thought here. I'm going 13 because we're going to be getting the inauguration is going to start to weigh a little bit more heavily on the VIX. And I think that'll offset some of the seasonal pressure that you get with the extra holidays in there and whatnot. So that's what I'm doing. I'm going 13.
So if you're playing the home game, listeners, that is the 745th time Russell has used some sort of explanation to justify a higher VIX here on the program this year. The man has been the most degenerate of volatility buyers this year on the program. Who knows? Maybe coming into the tail year, even the blind dog has to find that bone eventually, and perhaps this will be the week, sir. I can't fault your logic. It certainly is sound if it hasn't exactly produced too many accurate picks. We'll see. Got a couple weeks left, maybe, to redeem yourself. Mr. Rock Lobster, you haven't had a chance to pick that often this year, so this is a fun opportunity for you. What are your various VIX zones and your custom Skew flavors telling you?
I'm going to say we are. Looking at that with Russell, I could see that happening, but I still it feels like every week that goes by, the longer term vol gets a little softer, just because there's less crazy coming out of the president-elect than there was, I guess, at the election. Maybe, I don't know. Maybe people are just getting used to it. I'm going to say 12.55. 1255.
So not that dissimilar from where we are right now. That was my initial blush. I will say this, but then the more I thought about it, I thought, that it's kind of hard to outweigh that seasonality and we're coming into that time of year where everyone and their mother wants to just sell the vol and go home or go on holiday or go on vacation wherever they go. So sometimes it's hard to overwhelm that factor. We shall see who is correct if I can notch another one in my belt next week, or perhaps the Rock Lobster takes a rare victory. Or perhaps Mr. Rhodes takes an even rarer victory. We shall see. Meanwhile, that's going to do it for the crystal ball. It's also going to do it for this episode of Volatility Views. But before we go, as always, I'm check back in with my cohorts, my partners in crime, to see what they have cooking that may interest you. Let's start in the realm of the Duchy of Maine. What is cooking? Somehow little birdies are whispering on my shoulder, Mr. Rock Lobster, that all this talk of VIX zones and custom flavors of Skew is not for naught, that you perhaps have something coming down the pike that will speak to this exact issue. Am I correct, sir?
Yes, we are going to do the volatility course at Option Pit. It will be somebody who doesn't know anything about volatility, but will learn a lot. Trading vol products, VIX, and VIX Futures, also understanding realized vol first, and how you kind of structure products around volatility and not around just necessarily the price action of the underlying. There's other things to look at, and this will give you a sense, and also how to use the vol products in a way that gives you a shot to make money. We have a pretty good track record of it at Option Pit, and the same methodology we use, we're going to organize it into a more user-friendly version and sell it to the masses. So that's what you got for our vol class, probably January, I'm going to say 17th start date.
It's all about selling to those masses. Check it out, optionpit.com, to learn more. If you too would like to sample the many flavors of volatility Skew. And last but not least, Mr. Russell Rhodes, what's cooking in the land of all things CBOE, as well as, of course, with our friends over there at Live Vol. When can we expect that new iteration to come down the pike so we can kick the tires?
Gosh, I got to call those guys at Live Vol. I'm just so freaked out at not having school stuff hanging over my head. I don't know what to do with myself, which means it's just a matter of time before I get myself in an awful lot of trouble. Somebody give me an idea, something to work on, and I'll work on it. How's that? Shoot me an email at rhodes@cboe.com.
I think you need a new book, The Many Flavors of VIX, or Many Flavors of Volatility Skew. There you go.
I like that.
So there you go. Check him out, listeners. Check out his weighty tome as well. Options for advisors, and his option strategies, I should say, for advisors and institutions. Many, many thousands of pages, but I assure you that it is worth the read. And on behalf of Mr. Rhodes and the Rock Lobster, and even the Greasy Meatball, who couldn't make it today, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in so many great and varied questions. We'll get to more of them next time, I promise, and we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.